Yo, 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 yo. Emergency stream. Emergency stream. Yo, yo, just give me. I'm gonna give 5 minutes for people to roll in. Let's give it 2 more minutes. Ooh, that doesn't look good, market. All right. Is that a new high on the 30-year? I think that might be. New local high, obviously. Yeah, that sure is. New local high of the 30-year. That's insane. And there goes stocks, dump mode. Ooh, that is a rough stock chart. Look at that monthly, fully engulfed. Oh my God, look at that monthly chart. Are you kidding me? Are you kidding me? Oh, that's tough. Am I long? Absolutely not. Which one? Send it. Tell me. Meltdown. We've been bearish, um, for a bit. Let's take a micron. Ooh, doggy. Ooh, doggy. Ooh, doggy. All right, so this is what's going on. All right, let's tap in. Let's tap in. Okay, lot of action. Lot of action. Um, yeah, Micron's just getting wrecked. But okay, this is what we're looking at right now. 1 second. Ooh, stocks, full wipeout in stocks. Okay, so I got a couple of people asking me questions. What's going on? So, let me give you a little up to date. Why all of this matters? What's going on? So we had FOMC today at 2 p.m. That's where rate decision making happens in the market. This is where the Fed, who has only 2 points of control on the market, which is raising rates, cutting rates, or buying bonds and selling bonds. They enact monetary policy. So we had a 2 p.m. meeting, FOMC meeting. What we got, the outcome was that there was no rate cuts, there was no rate hikes. They decided to hold. There were free dissenters, which means there were free people on the committee who said, no, we need to hike. Market was expecting at least 2. We got 3, which is not great. Now, why does this matter? This is my thinking, right? This is my view. My view is that Trump took out Powell and put Warsh in the seat to take control and power away from the Fed and make sure that he's the solidified power over the market, right? So his goal was when Warsh came in, he was like, listen, we're not going to give any more forward guidance. We're not going to be doing Q&A where we move the markets. We're going to be working behind the scenes and enacting policy, but not in a way that moves the market. What ended up happening, it's made FOMC the most volatile macro event out there. We went into today's event, today's FOMC, with a 77% chance of them doing nothing. And like the rest, the fact that it was almost guaranteed they were going to do nothing. They're not going to hike rates or cut rates. We had a great inflation print. There's no reason. They basically kicked the can down. But the fact that the market was still pricing it at only 77% and not like 98%, which is what historically we have seen, is mind-blowing, right? It's made this event so volatile because now everyone is just focused and locked in on FOMC. Because they're like, listen, we don't know what's going to happen because there was no guidance given. So we all need to watch. They could cut, they could hide, they could be surprised, this, that, whatever it may be. So it comes out that they did nothing. Read the centers. Market took it. Initially, it spiked up, green market up. Stocks pumped up, Bitcoin pumped up. But the real thing is interest rates. So this is what was happening with interest rates right off the cuff. We have a front end, which is a 2-year bond. We saw rates go down 4 bips. We saw 30-year bonds, which is right here. So initially, we saw this green candle up right here on stocks and crypto, everything. But this is what we saw in the rate market, like just spike, like hard spike up. We hit a local high, which is, I think this is the high since in like 20 years or something. I believe so. I think on 30-year rates, this is, yep, I think we broke through that high. So we have not been here. So the last high over here was in 2008, 2007. So right before the financial crisis is when was the last time we were at these levels, right? Before that, that's all like prehistoric levels. But before the financial crisis was the last time. And this is what worries me. This is what I've been talking about all day, every day, on every stream. This is why I've been bearish on the market. This is why I've been bearish on stocks. And obviously that trade is working out really, really well. But today shows that the trade's not done, right? The fact that look at this, look at the Nasdaq, just air, right? So this is kind of where we got short on Nasdaq, and stocks got super bearish over the last few weeks. And our target has been 27K to 26.5K. That's been our target, and we've been sticking to it. Main reason is this. Look at this. Look at this chart. Like, if this is almost a reversal chart on like, this is not a chart you short. I mean, this is just breaking out. And this is another reason why. So a lot of people are not understanding why this matters. They're like, oh, 2-year rates are down. Guys, this is called a steepening of the interest rate curve. A steepening of the interest rate curve, that's where the long end, so 30-year is going up, but the front end is going down. That's going down because of monetary policy, because he decided not to raise rates this week, and basically said, you're basically saying that we're not going to raise rates. So market is basically punishing the Fed and everyone and saying that, no, we need to raise rates. If not, we're going to punish you. And that's what it's doing. So essentially, this is what it is. So long end rates, 30-year rates are going up. What that means is that investors want higher rates, lock up their money for a long time. 30-year bonds, you basically lock your money for 30 years and you get an interest rate, a coupon, right? Investors are saying, no, you need to give us a lot more than where we are right now because of potential inflation risk. That's all it is. So they're saying, because you're kicking the can down the curve, you're not hiking rates now, the market is like, okay, give us more money for our long end move on the market, right? So they're dumping stocks, they're dumping the dollar, and they're buying 2-year bonds. So they're buying 2-year bonds. Now it's reversing, but overall it's still down on the day. But basically, that's what it is. So front end rates are going down, long end rates are going up. It's called steepening of the curve. It happens when there's inflationary risk. It happens when there's a lot of growth, a lot of growth in the market, like where the world is doing really well, which means inflation is going higher as well. So it's kind of the same thing. But that is the big issue here. That is a big move in the market. Now, again, if we stop here and we go back down to interest rates, fine. Stocks, everything might go up. Maybe this is a bottom, but this is definitely not great. The AI bubble clearly has taken a big hit. We've gone from 30K to 27.4K. 27K was our first target. And listen, this has been a phenomenal trade. Whether you've been on stream, whether you've been reading the newsletter, this has been a phenomenal trade of ours. In one good thing, if you're in crypto, is that because crypto front ran everything so much, it's not moving as much. So it's outperforming. So Nasdaq's down 1.6%. Bitcoin's only down 0.4%, right? So that's why the shorts on stocks has been way more profitable for all of us. So it's important to keep that. Right now, we're just running the running the short still that we've had for the last little while. We're short Solana, and I think we're short some meme coins and stuff. Short Fartcoin, and a few other things that are moving, that are giving us, like, I mean, look at this, all this stuff is 5, 6, 7, 8% down. So only Bitcoin's kind of holding because people are dumping alts and everything and buying into it, but they'll start moving too. ETH's also taking a hit over here, but yeah, that's in essence what it is. I'm looking at some of the comments. There's a lot of silly stuff. Okay. All right. I think this is good for now. I just wanted to make sure people kind of understand what happens. All right. I think that's good. I don't think we need any more. Any other questions? Holy shit, we got 1,000 people here already. Oh my god. All right, I'll keep it alive for a few more minutes if there's questions. But clippers go crazy. We're gonna run a clipping campaign. So if you want to clip everything from what we just saw and post it, that'd be great. Dumpy, 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 dumpy. We're going down, down, down. This needs to start moving all around. It's holding. Bitcoin's really holding. All this other shit is getting crushed, but I think that's good for now. It should be. Yeah, I definitely think that Bitcoin's holding pretty well here, given everything else. But again, Bitcoin has front run the market quite a bit. Went down to 49.50K while stocks were making highs. So now it's time for stocks. Look at this, right? So I think I mean, they're still going to go down, but like clearly not as much. Like, look at the monthly on Bitcoin, right? I mean, it's still not great, but like long term, look at that. And then look at this monthly. Oh, it's a beauty. Like, look at that. Come on. But this is good because we're sitting at support on like big support levels on Bitcoin. Like, what if this next red candle on Nasdaq prints down towards 25,000K, then yeah, then we're definitely going to break down here and retest like the what is that, 5049K. But that's a lot that's still time. Listen, I'm looking at long term, month to month, but we could have a rebound. We could rebound to 28.5, 28.2K, etc., and it should be fine. All right, we're gonna hold steady here for a few. Okay, if there's other questions, let me know, guys. Any other questions? Let's see. Not down only. We've been down only for months. I think stocks, yeah, stocks down only. Make sure you guys know what I'm talking about here. We're talking about stocks. What's up, Cole? Like, look, Sam. Like these things have been printing on shorts. Mu down, what, like 50%? SanDisk. This is funny. Yeah, I mean, these have been epic shorts. Look at this thing. Maybe it's a buy, what, like down here somewhere, 540, maybe another 25-30%. Could they have impact? Sure, we could see a little rebound if we see really good earnings. But you know what happens if it's really bad earnings? You know how down we go then? I have to say, right when crypto people pivoted from um crypto people pivoted from crypto to AI and stock market, set the top. Like everybody was like, "Oh yeah, low float SpaceX. This is going to be great. Yeah, we're going to buy SanDisk. We're going to buy Mu. All these are traded on Hyperliquid. The highest volume right now on Hyperliquid is pretty sure it's SanDisk, or at least like up there. Let's take a look just to be sure. It's pretty sure that's what it was. Last I saw. Um, okay, so yeah, look at this. Oh my god, like top volume. It's all stocks because all these crypto plebs think they know how to like run the market, run macro. No, bro, you guys are like beyond retarded. You have no clue how any of this shit works. And now you're getting slaughtered and you're giving me all your money because I shorted that shit over the last few weeks in your face. Love to see it. Simply fucking love to see it. That's where you belong. This is why weeklywisdom.com. You simply stay cooking. They're like, oh, we're going to take the other side of the weekly wisdom trade. Okay, bro. Go ahead. You're wiped out. You're on food stamps now. This is why we never fade weeklywisdom.com. Do not fade this. This is hands down the ultimate unlock. Like trust me, like we have an absolute guarantee this is an unlock. A dumpy. It's all dumping. Why is it dumping so much? I love to see it. I simply love to see it. All right, I think that should be good. I think that was a good quick stream. I'm gonna be trading more in Weekly Wisdom. I'll be live in the rest of the day. Not live, I'll be in the chats there. So make sure you guys join weeklywisdom.com. Cheers, boys.